And welcome back. This is my weekly video I make for you guys based on my own analysis of Realtor.com's data. So in today's video, I'm going to explain what's happening right now regarding home prices, housing inventory, price reductions, and of course, much more. If you guys are new here, I invite you to subscribe and join the family. I post frequent housing market updates so you guys can make a more informed decision about whether you should be buying or selling a house. And with that said, let's go ahead and dive right in. And again, this is based on my own analysis of Realtor.com's weekly housing market data. And again, just like my previous videos, I didn't even read their report here. Instead, go to realtor.com/research/data. Click on this link right here. It takes you more or less right here. So let's first talk about asking prices in the US compared to 1 year ago, because asking prices have only increased by single digits for the past 11 consecutive weeks. In contrast, in 2022, there was actually only 3 weeks in which we saw single-digit increases in asking prices. Every other week in 2022, we saw double-digit increases compared to the previous year. But of course, a lot has changed this year because every single week this year, we've been seeing increases of less than 10%. Let's also talk about housing inventory, or the number of houses for sale in the US, because according to Realtor.com, that increased by 67% compared to 12 months ago. A 67% increase in the number of houses for sale, which I want to mention this as well, because according to Altos, when looking at their website for housing inventory, that has increased by 76% compared to the end of February of 2022, an increase of 76%, which is obviously much greater than the 67% increase that Realtor.com is reporting. In any case, as I mentioned right here, this gain of 67% is very close to the 12-month high that we saw a few weeks ago in early February, when the housing inventory increased by 68.9%. So we're very close to the biggest year-over-year increases of housing inventory back in, February 4th. Housing inventory increased by 68.9%, now has increased by 67%. Also, as a note right here, inventory has been increasing for 18 out of the past 24 weeks, despite declines of new listings for the past 34 weeks. So take a look at this, because new listings again have been decreasing compared to the previous year for 34 consecutive weeks. And on top of that, for the past 5 consecutive weeks, we've been seeing double-digit decreases of new listings. I remember in late December, which was more or less right there, December 24th, was the smallest decrease in new listings for quite some time. I remember during that time thinking, gosh, are new listings going to be increasing this year? Are we going to see an influx of listings, which is going to cause housing inventory to skyrocket or to increase as well, and cause a downward pressure on home prices? But that got completely reversed once we hit the January of this year. So for the past, 29 out of the last 31 weeks, we've been seeing double-digit decreases of new listings. So for the past 31 weeks, which is right there, there's only 2 weeks we saw single-digit increases, or single-digit decreases, I should say. And that was for the week ended December 24th, as well as January 21st. What's quite remarkable regarding this decrease of new listings, for the most part down by double digits for quite some time, is despite the fact that active listing inventory has been increasing on a year-over-year basis ever since mid-May last year. So we're not seeing an increase or a giant surge of new listings, which is causing housing inventory to increase. We're seeing actually just the opposite. Houses are taking longer to sell. We're seeing fewer contracts being signed between buyers and sellers. And that's why we're seeing active listing inventory been more or less on the upward trajectory ever since May last year. Now, this is not to say that new listings are increasing, because they actually have been, but actually falling below years past, which is, as you can see right here, according to Redfin. So new listings have been increasing more or less every week this year, which is the blue line. This red line is 2020, the black line is 2022, the orange line is 2021. So for the 4 weeks ended February 19th, there was approximately 66,000 new listings. However, that was down by 18.8% compared to 1 year ago. Also at 66,000, back in 2020 at this time, actually 2022 at this time, there's approximately 81,000. And also in 2020 at this time, there was just under 87,000 new listings. So even though new listings have been increasing, they're falling well below years past. And this is mainly due to the fact that a lot of people do not want to give up their very low rates of less than 4%, for example, when rates right now are at 7%, actually over 7% right now. Therefore, we're seeing a lack of people who want to sell their houses, given the fact that rates have been surging so much this past couple of months. Anyways, let's talk about days in the market. So days in the market has been increasing for the past 30 consecutive weeks. This means it's taking longer for houses to sell compared to the same week 1 year ago for 30 consecutive weeks. And for the week ended February 25th, it was actually taking 19 days longer to sell a house compared to the same week of 2022. Therefore, it's taking approximately 3 weeks longer to sell a house right now compared to a year ago. One thing I do want to mention though is that this is actually a decrease compared to the previous week. The previous week was a gain of 24 days, and last week it was a gain of 19 days. The last time we saw a decrease of days in the market was for the week ended December 31st, going from 11-day increase to 10 days. So one thing I do want to mention regarding days in the market is that this is a lagging indicator because this is based on closed home sales, what our housing market was like 1 to 2 months ago. And I mentioned that because rates have been surging over the past 4 weeks. And if they sustain at these high levels of above 7%, it's likely to decrease home buying demand and likely to increase days in the market. But again, we won't see the true impacts regarding home sold prices and home sale prices in approximately 1 to 2 months from now. All right, moving on. Let's talk about the number of reduced price listings, because for the third consecutive week, that actually has decreased. It went from 170% on February 4th. Now it's 145.5%, an increase of 145% in the number of reduced price listings. However, having said that, we've been seeing triple-digit increases for 15 out of the last 17 weeks. So that's the number of reduced price listings. Let's also talk about the share of price drops as well, according to Altos. So for the week ended February 24th, the share of price drops is at 31%. Compare this to mid-November, the share was 43%. Therefore, the share of price reductions has decreased by 12 percentage points over the last 3.5 months. Also at 31% right now, this is the lowest levels since early July last year. The share of price reductions has been more or less decreasing over the past 3.5 months. However, having said that, when looking at the same time period right now, compare that to the past 5 years, we're at least a 5-year high. The best way to share this is to have a look at this chart here on altosresearch.com's website. Again, the share of price drops at 31%, the lowest levels since approximately July 1st last year. However, though, at 31%, much higher compared to a year ago at approximately 17%, 2 years ago at 18%, and also pre-COVID, back in February of 2020, the share was 25%, much lower than the 31% we have right now. Also in 2019, the share was about 27%. In 2018, I should say March of 2018, the share was at 24%. Therefore, because the share right now is at 31%, this is at least a 5-year high during that same time period. Before I share a summary of today's video, as well as some kind of predictions of what may lie ahead, I also want to share how this last week compares to years past going back to 2018. Again, Realtor.com only provides weekly data going back to July of 2017. So obviously in 2022 and 2021, we saw a surge in asking prices, huge decreases of housing inventory, and of course, a huge decrease in the number of reduced price listings compared to years past. But in 2019 compared to 2018, asking prices only increased by 7.2%, which coincidentally actually coincides with last week, 7.2%. Here's what does not agree though. Look at this, active listing inventory surging by 67%, whereas in 2019, it only increased by 5% compared to 2018. Also have a look at this because the number of reduced price listings only increased by 13% in 2019, whereas this year it increased by 145%. Okay, I know that was a lot to cover in today's video, so here's a summary for you guys. So inventory has been rising on a year-over-year basis in 18 out of the last 24 weeks. It also increased by 67% compared to 1 year ago, according to data from Realtor.com. Of course, when looking at data from Altos, it has increased by 76%. This growth rate is very much significant given the fact there's been fewer new listings from last year for 34 consecutive weeks. However, the number of houses for sale, or housing inventory, has been on a downward trend since November last year. We're currently at the lowest level since June of last year, according to data from AltusResearch.com. Also, new listings have been declining by double digits for 29 at the past 31 weeks. Our housing market would look a lot worse if new listings were absolutely skyrocketing, but in fact, they are not. Not to say our housing market is without its challenges, but it would look a lot worse if new listings were skyrocketing. Number two, mortgage rates in general had been on a downward trend this year until we hit February. Average 30-year fixed rates have increased or have risen 1.1 percentage point over the past 4 weeks alone. This causes an 11% decrease in buyers' purchasing power in just the last 4 weeks, which is absolutely insane. Rates have been rising much faster than home prices decreasing. Let me repeat that. Rates have been rising much faster than home prices have been decreasing, which is causing housing affordability to actually get worse. And number three, we saw a huge increase in the number of reduced price listings over the past few months, and also triple-digit year-over-year gains in 15 out of the last 17 weeks. But the share of price reductions has been on a downward trend ever since mid-November. And number four, houses are taking longer to sell for 30 consecutive weeks. Again, though, this is a lagging indication of our housing market. So what are some potential huge changes ahead, given the fact that rates have been more or less above 6% ever since October 1st last year, and rates have surged 111 basis points over the past 4 weeks alone, an increase of 1.1 percentage points, going from about 6% to around 7.1%. Number one, average rates are around 3 percentage points higher compared to 12 months ago. This, of course, causes a 30% decrease in buyers' purchasing power, which is causing a lack of housing affordability. And speaking of that, housing affordability is still an issue. It was improving when prices and rates were going down, but rates have increased approximately 111 basis points over the last month. And speaking of that, buyers looking to purchase a $450,000 home today, putting 5% down versus at the beginning of February, would pay around $313 more per month to buy that same $450,000 home today versus just 4 weeks ago, a gain of $313 more per month in your average monthly housing payment. Obviously, that's a giant increase in the span of just 4 weeks, a gain of $313 per month, which is just crazy. Anyways, number three, based on my own analysis of the National Association of Realtors data, annualized home sales in January fell to the lowest levels since October of 2010. Obviously, we need more data, especially during the spring home buying season, which will be very telling. One thing's for certain, though, is that this housing market is highly rate dependent. In other words, we're seeing this giant decrease of home buying demand when rates are increasing. And when they decrease to levels back in early February when rates were about 6%, we did see some signs that demand was actually increasing. So the direction of our housing market, in my opinion, is going to be largely impacted by the direction of rates this year. And speaking of rates, to combat inflation, the Fed raised rates by 25 basis points on February 1st this year. This, of course, increases interest rates for HELOCs, which, of course, is home equity line of credits, credit cards, and new auto loans. But of course, saving rates or saving interest rates go up as well. We're seeing inflation start to slow down, but not by very much. It's remaining very, very sticky. Rate hikes are expected to be smaller this year, though. The street is expecting 3 consecutive 25 basis point rate hikes by the Fed over the next 3 meetings. In comparison, the Fed raised rates by 75 basis points 4 times in 2022. How much the Fed decides to raise rates depends on inflation data in the months ahead, so a lot could change. Now, having said that, mortgage rates are likely to stay elevated until inflation starts winding down. And number 5, how will homebuyers react to rates above 7% on average nationwide at the time of this video, which is the 2nd of March? How will homebuyers react? In my personal opinion, we could see an increase of cancellations and also an increase of people who put their plans on hold to buy houses. On the other hand, there could be a pool of buyers who locked in their rates in early February when rates were closer to 6%, so we could see a slight increase in home sales in March. Of course, time will tell, and I'll definitely keep you posted. And number 6, we're starting to see some early signs that home buying demand is decreasing once again. So for example, according to a new report that was just published a couple of days ago by the MBA, they reported that applications for home loans to buy houses hit a 28-year low, the lowest levels going back to 1995. Also, according to the MBA, purchase applications have decreased in 4 out of the last 5 weeks. And last week, it decreased by 44% compared to 1 year ago. However, having said that, new home sales, which is defined as a contract being signed between a builder and a buyer, have been increasing slightly for the past 2 months. And number 7, as I report to you guys over the past couple weeks here, I said that I wouldn't be surprised to see negative price growth very, very soon, in the next 1 to 2 months. In fact, Redfin actually reported on the 2nd of March that home sold prices decreased by 0.6% compared to 1 year ago. In other words, negative price growth on average in the United States right now. Now, this decrease by 0.6% may not sound like a lot, but this is actually the first decrease on a year-over-year basis in home sold prices going all the way back to 2012. And number 8, these videos, especially this one, even though I love making this video, it takes me hours to make. So I hope you guys appreciate that. And of course, if you do, please hit the like button and consider subscribing if you haven't done so already. I appreciate you guys watching this video, and I'll see you on the next one.